Hey, what's going on, guys? This is Terrence Ray back at you with another stock market update. Now, yesterday we had a little bit, a little down move yesterday. Uh, and we don't get that with this market. We haven't had that too often, especially the past, 5 months. It's been like a slow grind to the upside. So when we do get a little bit of downward action, it's pretty much, it's semi-alarming. Now, today, the market went back to what it normally does. I'm gonna pull up the SPX. Now you can see here's the expected move for the week. So the market held true to form. It literally went to the edge of the expected move yesterday. And then today, look where we at. So it actually went there, went past it yesterday and drifted up and closed right inside of it. Now you see today we pulled back inside. Now this is what we want to look for going into the rest of the week. We still got 2 more trading days this week. Now, if we get, let's say the market comes back down and takes this low out or test this low, it's on at that point. What I mean is once the market tests you got to look at the expected move for the week almost like support and resistance. It really is. Even though I grabbed this from the option chain, it's one of those things where traders trade around that expected move. So option traders, bought bought options or went to the futures market and traded around this move. And so it kind of brought price action back to here. Now, just like any other support and resistance um marker or line or trend line or moving average or whatever you want to call it, once it tests it and then pull back, the next time it comes through and breaks through, we'll get a big move. So I'll be looking tomorrow. We may have a scalping opportunity tomorrow. If the market goes up, I think it'll just drift. You may slowly drift up. If tonight we wake up in the morning and we got a move, and once it breaks down past this low, I think we're off to the races to the downside. And it is quite possible that that happens. I'm gonna pull up a chart of the VIX. We're gonna look at the VIX. Now, as you can see, the VIX, we had a low, high, a higher low, then we got a higher high. Now, same thing, volatility pulled back today, right? So now I already got, after we had I kind of predicted this weekend with the Harami candlestick pattern. We got the gap, the explosion upward. Now, generally, even though the VIX is very hard to chart because it's just, you get big movement after big movement, or either it, expands then contracts. Now we got a big red candle. I want to see what happens. The same thing here. We'll either see this high taken out. Now, if this high gets taken out right here, like the tomorrow, we get a big up move in the VIX, or either Friday. The next tomorrow could be slow too, and then Friday going into the weekend, it attacks this high right here. This is the next. This is where we need to see it go. If it goes back up in here and takes this high out past 15, then I expect at the same time while that's happening, this low will be taken out. Then at that time, we'll start seeing some uh a large move to the downside in equities. Same thing. I'm gonna pull up the triple Qs. Look at the Nasdaq. I still got some levels to go down in the Nasdaq, but I'm gonna pull up the NDX because I don't have any. I just want to show you this candlestick pattern. Now this is three candlesticks right here. So you got what would look like almost like a doji, right? And then you got the gap down. Then you got the hammer candle. Now you got to pull back up into here. From this low, excuse me, this high to this low to this top right here. That that is this level. If I put it up there, that's a Fibonacci retracement. That's like the little sweet spot. So I'm gonna show you something. We got about 3 minutes to go. See that? I could see it right there. See the 618? That level right there held as resistance from this high to low to high. And I threw my retracement on. Now we want to see if we get it. If, like I said, same thing with this is the Nasdaq. This is the same thing. Like, so they're all gonna move. So we can watch all three of these together. We can watch the VIX, we can watch the SPX, and we can watch the NDX. If the VIX pops, we'll see price action over here take out this low. At that point, then we can start looking at levels to go lower in the markets. All equities will go lower because these are the Nasdaq. That's your tech sector. I'm going to also show you the one thing about when you see these moves getting ready to start, whether up or to the downside, doesn't really matter. You can find them in other stocks. So we're gonna look at all of this is going on at the same time. Let's take a look at the XLK. Look at the XLK. I'm gonna remove the drawings on here. Look at the XLK. Don't that look like the same pattern that I just had on the NDX from here, here, here? Because you got to look at it. They're trading in a range. So it's just like this. The market, you get expansion. Here's an expansion. Then you get contraction, right? Expansion, contraction, contraction. And then you'll get an expansion. Let's take a look at bell just sounded. Let's go to I'm gonna take a look at Home Depot. Home Depot is on. We already got see how Home Depot kind of drifted. Now look at this move right here. Pulled down, pull back, boom, big move. That's something similar to what we want to see in the Nasdaq and the S&P 500, and then that way we'll be able to. I even seen another setup in. Let's see. I think it was MicroStrategy. Now there is a watch list on TastyTrade where you come up here. I like to keep this. This is my watch list, which I always have over here. And then over here on this column, I'll come look through some different watch lists throughout the day. And then one over here they have is Tasty Hourly Top Equities. So when I click on Tasty Hourly Top Equities, I'm gonna find MicroStrategy on here. I think it was MicroStrategy as I seen that let's see if I can find MicroStrategy. Now you look at MicroStrategy. So keep looking at that. I'm gonna go back to Home Depot real quick and then we'll come back. Home Depot, see this? Pull back, big move. Let's go back to MicroStrategy. We right here before we get in the big move. It's possible. Now I'm not saying that we will. I'm not going. We won't. I wouldn't advise jumping in this. And this stock is huge. It's almost untradeable because the it's so when you look at the option chain is so the bid ask spreads on the option chain are so wide. Like so if we come out here, what is the monthly? We look right here at the monthly. We can see if we go right here at the money, you can see look at how wide the spread is. So this is, darn near untradeable. No one's gonna you got $10 wide uh strikes. The spread is like it's crazy. So it's untradeable in the option market. You'd almost have to, I don't know, this an account like what a $1,600 stock. You darn near gotta have like I don't know a quarter of a mil trading account, maybe $1 million to trade something like this. So I'm not advocating trading it, but I did just want to show you the setup. The setup is here. I think I already got it put up on here. Let's see drawings. Yeah, did I? I guess I don't have it on there. Let's go ahead and put it on there and show you exactly what we're looking at. Now, MicroStrategy is almost like a levered play in crypto. See, it's actually right here. But like I said, anything in between 61.8 and 38.2. And I talk about that in my Fibonacci masterclass. I got a little masterclass that I did for the members, for members only. So if you guys want to take a look, want to become a member, you can see exactly um, how use Fibonacci to set up trades and stuff like that. But you can see right here, we right here in between this area. Now I wouldn't. Now if MicroStrategy was to go down, what could we expect? We could expect that we should get a down move in Bitcoin as well. Let's bring up Bitcoin just to look and see. Now Bitcoin, I'd like to look at Bitcoin on the weekly. Doesn't really have. It's just kind of holding right here. And you can see it took out these highs right here, and now this level now is going to act like some kind of support level. So let's see exactly. But I would guess that if MicroStrategy was to take a down move, we could expect Bitcoin to do something as well. Let's see. Let's see. I had some more stuff that I wanted to take a look at. I had got in Hut a while back. I ain't in it no more, but it did go finally and hit my target. You guys can see, I had this target that I put on back here from February, and you can see that it finally did came back here chopped. Now this was one that that's pretty that would have been a good play to sell a put in, because then if you would have gotten put the shares, which you wouldn't have, uh, you would have been able to cash in on this one. This one was a good one. I also wanted to talk about Tesla. There is a influencer that I follow on IG, and he was talking about how low, how low do you think Tesla will go? And you know that. Te- so basically, if you ask me to look at the chart, I mean, I got a gap here. I could see it filling this hole right here, right around what is that, 150, between 150 145, but you don't know. But in the meantime, you don't know how long it's gonna take to get there. We overdue for a nice little bounce in Tesla, and you can see right here today, this green candle overtook this candle. So what I did in another account, I just came out. I sold a put. I came out in May, and I sold this put right here at 145. I sold that one right there. Now it's showing currently a probability of profit of 80%. This is the only platform that I know that shows you the probability of profit and the P50, which is 50% of your total profit that you can make, and that's 89% on this trade. There are other ways of figuring it out. I take that back. Thinkorswim does it, but it doesn't do it as easy. Like as soon as you click on this, it just gives it to you, right? You gotta pull it up in the trade tab, in the analysis tab, and then it'll give it to you there. But here, this one gives it to you right on the option chain. And so right here, you'd be selling the 18 delta. Now, a back of the, as they say, back of the envelope way, figuring it out is just, this is the delta is 18. So basically, that would give you, you would say like subtract that from 100 to give you like 82%, right? It's close to 80. So you could do it that way. But this one to give it, their platform gives it right to you. But you just right outside the expected move. Now, when I sold this 145, this ruler right here was right here at the 145. So it did contract a little bit. Volatility did come in just a little bit in this particular on this option. Now, you may say, well, why not just set a buy limit there? Because the market may not go there. Excuse me. So if you wanna own Tesla at 150 and you or 145 or whatever, like you saying, hey, this is my target. I think it's gonna get here. This is where I want to own Tesla at. Instead of setting a buy limit there, waiting on it to get to 150 or hoping that it get to 150, why not just sell the put? Just come to 150 and sell the doggone put right there. Or sell the put at 145 or wherever it is that you want to sell it at, where you feel comfortable if the stock comes down there, um, and you get put the shares, you'll get put here at 150. But let me tell you the difference. The better part about selling the put, if you set a buy limit here to get filled at 150, you're gonna pay what 100 shares at what 150, what's that, $15,000. Well, if you was to sell this put right here earlier today, I want to say it was in excess of 500 and some dollars you would have took in. But let's just say you sold the put right here. Um, you will still get put the shares at 150, but it will be minus this credit that you took in. So you'd be getting it, look at it as getting it at a discount of 400 and what, $450, the mid price, because you took that in for premium. So, selling, I always think that selling puts is a better way to own stock. Unless you just day trade. You day trade and you buying the shares for you don't want to afford like missing a uptick. That's something different. But I want to get long stock. I'm selling puts. I'd even come in if that's the case. If I really just want to get it right here, I sell it in the money. But sell to 170, take in $1,200 in premium. Let's say the market, you don't get put the shares, and the market goes up about 10, $15. It goes up about 10, $15. Half of this premium gonna come out. It'll probably be worth, because you can look. All you gotta do is go down the chain. If it go up $10, that means you'd be right here. So you probably make $5, $500 just on that $10 up move. That's why I always if I want to own stock, I'd rather sell a put in the stock. Unless you're day trading and you want to get in right then and there, selling puts is the way to go. Especially when the IV rank is 50. Like for the most part, I've never seen a time when Tesla didn't have juicy premiums. Like it's not, you're gonna get, it doesn't matter what, you can come way, and Tesla was crazy. You can come way out one standard deviation. See this dotted blue line right here? You can come way out past that and sell the 130s and get $130. Like, what are the chances? I'm not saying it can't happen, but what are the chances in the next 44 days that Tesla bottoms out and goes to 130? It's already, not saying that it can't happen, but what are the odds? What are the pot odds? It's already down. So, I think you got a I would say that it got a better chance of it going up here, once pat to one standard deviation, um, to the upside than you do to the downside, which is why you got skew. So if we were to come, this is the 11 delta, and the 11 delta right here is one standard deviation. That's about, what call this at 168. That's 135. So that's what, $33 out of the money. So if you go up $33, that's gonna put you at what? 201. And look right here. So you can collect 237 if you go equal distance up for this call, you're gonna take in more premium. So, I would definitely, just that alone to me is showing me that uh the risk at this point is to the upside more in this particular exploration than it is to the downside, because you're getting more juice, you get more bang for selling these calls. So that's just, but that's just understanding the option chain and how and how pricing option pricing is, but being able to look at the chain, uh, going down up and down the chain and looking to see what a option is worth. Now, ideally, whatever you are, if you bullish, then you may not care about that, right? Um, but those are just some of the things that I'm looking at. I'm just saying I see the risk to the upside in Tesla right now. I believe the risk is there, meaning if you were to, I would not definitely be trying to short this stock right now. If we get a big pop, I think it'll be to the upside. And with that being said, I think selling puts, if I'm gonna do anything, is the way to go. Or selling strangles, you may even be able to skew the strangle. Or coming outside of the expected move, selling this 16 delta and then selling this, I probably would still skew it. Maybe sell the either 18 delta right here, the 145, or the 140 right there. And all right, move this up. Let's see. Now we got a basically a little bit of a skew to this strangle by selling by moving that this put up. You can see we got the delta, whereas before, if I do like this, you see how the delta is negative, right? That would be a slightly bearish um strangle. If I wanted to skew it, sell the 150, come right here, and then sell this 205. Now we got a positive delta of 7.1, which means or denotes that this is a bullish trade. So without getting too deep into the weeds, that's just something that I wanted to go over. Different ways of using options to really show what your bias is in the market. There's all kind of things you can do with options to kind of like mimic synthetic stock positions. And with that, guys, I'm gonna close this video out. I will be back on here tomorrow. We're gonna see what happened tomorrow. Remember, we looking for a breakout. We could get it either direction. Go back to the just to recap. If we get this down move to take out this low right here on the SP 500, we jump outside of this expected move again to take this low out. Look out. The next support level should be down here where this gap is. Let's go ahead and draw something out there like so. Once if we take this low out, next place we're gonna be looking is right here. We're gonna be looking right in that level right there. So that's another from here to here is about another 40, $50 in the S&P 500. In the SPY, that's another $5 or so. So hey guys, if you got something out of this, make sure you hit the like button, hit the subscribe button, follow, hit that little notification bell because I may go live on Friday. Maybe we'll do some live scalping, um, some little live option trading on Friday. That guys, that being said, I'm gonna be out. Peace.